Good evening from London. The FTSE All-Share was stuck in the red today as commodity companies came under pressure. The biggest story on the square mile, of course, is Deliveroo's disappointing, long-awaited stock market debut. At early trading, shares in the delivery firm fell as much as 30%, wiping more than £2 billion off the company's valuation. Over the past few weeks, a number of high-profile fund managers said they would not be buying their shares as they were put off by factors including the working conditions of the riders and a lack of investor power over the direction of the company. Shares in Asia-Pacific mostly declined on Wednesday. This was despite official data showing China's factory activity growing in March. The stock price of Nomura in Japan continued to see a third straight day of losses and fell 2.94%. On Monday, the country's largest brokerage and investment firm share price plunged more than 16% after announcing it could post significant losses as a result of the Archegos Capital liquidation. Smartphone maker Xiaomi has become the latest Chinese company to enter the electric vehicle industry after announcing a $10 billion investment over the next decade. Xiaomi is the world's third largest smartphone maker, behind Apple and Samsung. The tech giant says that its goal is to offer quality, smart electric vehicles. So far, the company has given no indication about whether it will produce budget models or target the top end of the market. Existing cars in the region retail for an average of $4,500. Sales of new energy vehicles are expected to make up half of the overall new vehicle sales in China by 2035. US stocks closed lower overnight as investors awaited details on President Joe Biden's planned infrastructure spending package, which is expected to cost $2.25 trillion. Days after the collapse of Archegos Capital Management, Wells Fargo stock jumped 4% on the Nasdaq after reporting it suffered no losses related to its exposure to the firm. Those are your main stories from London at close of business.